Good morning. Welcome to the SNN Network Canada virtual event. I'd like to introduce our next presenter, Jordan Ross, Chief Investment Officer of Voxtur Analytics. Jordan, the floor is yours.
Thank you, operator. Good morning, everyone. Thanks for attending, taking the time to learn a little bit more about Voxtur today. I'll give you some background information since we're a fairly and quickly growing company here. But Voxtur is a real estate tech company. And so we are technology that serves the real estate market. General counsel forced me and is always ensuring that I put this up, a forward-looking statement. But really what we are, as I alluded to, we're a technology company, but more accurately and more importantly, we're actually a data-driven company. And so what that means is we have amassed one of the largest residential real estate databases across North America. And we have a firm belief that we are monetizing that data. We're not selling flat files. The way we monetize our data is by pushing it through our various applications. And we have 3 different platforms today that are all synergistic and complementary. But before I go further and do deep dive into each of the platforms, the other way to look at it is the real estate tech landscape and real estate in general is a very archaic space. It's been historically slow to adopt technology. However, the one positive that may have come out of COVID is that our clients were then forced to adopt technology due to various things such as stay-at-home orders, and therefore it accelerated that adoption of the technology, which fit perfectly with our thesis that our platforms allow these professionals or institutions to do their job better, cheaper, and faster. And so what Voxtur has is we have 3 different platforms today. We have a valuation platform, which some may refer to it as an appraisal platform, but we actually do much more than just appraisals. We have a title platform, and so that's a title insurance platform, but we have very unique products that serve that space. And then we have an assessment and a property tax business, which is not all that well known to most people. But I will say one thing to kind of emphasize the importance of property tax, that it is the largest operating expense after debt service for the private homeowner. And on the government side, it's always their largest revenue source. So it's a very important thing that tends to get overlooked by the average person. And that property tax platform is our unique differentiator. And so on the slides here, I have 3, we are Voxtur Analytics. However, we have 3 platform brands. The first one's ANOW, and that's our valuation platform. And that connects lenders or the banks with the professionals, being the appraisers in this instance, or some real estate agents or the inspectors, depending on what the service our clients are requiring. And then we have VenueTech, and that's our acquisition that we have announced, that we've signed a merger agreement and it's pending close and TSX review and approval, which we don't foresee any issues, but that's the current status of it. And then they connect, before I go further, is they connect the institutions, being the underwriters and the title agents. And then we have our PTA, which is our property tax platform, and that connects on the government side, the governments with the assessors. And so the underlying theme in each of these is that these are platforms that are connecting the professionals, our B2B business our B2B business with the institutions, be it the lender, the government, or the title insurance underwriter. But ultimately, we are filling that gap that's connecting them with the professionals, because we still use professionals today. Appraisers, although it's limited and it's in short supply, they are still relevant today. They are still required to sign off on a valuation. And so moving forward, and we'll continue to get into some of these platforms further. But another thing that I want to address and make sure it's clearly understood is that what Voxtur does is we do, in summary, the due diligence for the entire life cycle of the loan. And so what does that mean? Predominantly, we're in the U.S., and so what I'm about to explain is more common in the U.S. than it is for a Canadian. It's a different mortgage market up there. We have the ability to serve both markets, but what I'm about to explain is we serve right at the outset, the origination, or some may call it the primary, and therefore we continue that valuation all the way through when it gets sold to a servicer, or when it gets sold to Freddie Mac or Fannie Mae. And then it goes back to a servicer, and that servicer then has to serve that loan, and may happen a refinance happens. And then it moves all the way to hedge funds in the background are trading on those portfolio of loans, and all the way to the end of the life cycle, the default and foreclosure. And so we have specifically and been strategic about the three platforms that we have, because we believe those are the most important data points on any loan when it's being either originated at the outset, or it's the consumer is defaulted on the loan and the bank takes ownership of it. And so in order to transact on any of these loans, you require our three services. And so it's a massive addressable market. We are not serving this or solving for a small sliver or one specific segment. We are all the way through. And so for the purposes of time, we're just going to go, I'll use ANOW as a case study here for a number of reasons. We're a fairly acquisitive company. We've done approximately 5 acquisitions this past year. That is not necessarily trending and going to continue at that speed and pace in the future, but we are definitely a growth-oriented company, and that requires a good balance between inorganic growth, being an acquisition or a partnership, and organic growth. And so we're starting to see the fruits of those acquisitions come to fruition very, very quickly, and having double-digit organic growth going forward. So when I say we're connecting the institutions with the professionals, what does that exactly mean in a more detailed way? And so the top three mortgage originator in the country, in the U.S., we have completely white labeled, and they have now used our product to go direct to the professional. And so typically, by way of background, what would happen is a lender needs a valuation done. They farm that out to an appraisal management company. The appraisal management company then interacts and goes back and forth once they have found the right appraiser. And then it comes back and they do a quality control, and they usually go back and forth. And that whole process can take up to 3 weeks, especially in a low rate environment where there's high amount of demand and a significant increase in refinancings. But what our product has now allowed the lenders to do, and we went live in less than 3 months, and they've already onboarded 60% of their portfolio, and we're seeing daily volumes in the thousands. But what that did was they are now able, due to the quality of the data that we put in the platform, due to the security and the encryption around it, and due to the mobile and the functionality and the route optimization, that they can now work directly with in this case, the appraiser. And so what that allows, and the appraisers love it, it actually springboards 2 different offerings. We have a top 3 mortgage originator using this live, and it's been very, very, it's had ripple effects across the industry and what we're seeing. But what that also did was it's now forced the professionals to adopt our solution, because ANOW is twofold. It's the workflow and the platform. It's the air traffic controller for the lender to have an insight on their volume and ensure accuracy on their loans and the valuations that come in. But in turn, the appraisers use the ANOW platform for their complete back office platform. And so what does that exactly mean? It's the way bankers use Excel every day, appraisers are using ANOW to do their job. The forms are uploaded. They automatically use the form. They're uploading pictures on their mobile phones, it automatically gets uploaded into the cloud, this cloud-based platform. And so by having a quick, easy-to-use product for the appraisers, it's allowed them to significantly increase and lower their turn times in this high-demand, low-rate environment that we're currently in to the lender. And the lenders we're seeing will pay through the nose to have those turn times compressed to 24 or 48 and sometimes even quicker, 24 hours. And so we have the stats to show the turn times, and that's usually the launching point with any new client that we have. Show me how you can do it. And we have empirical-based evidence to show that, because the appraisers use the ANOW platform to do their job and create the valuation, and in turn submit it in an automated, fully succinct way to the lender. And so getting into ANOW a little further, ANOW was a small little company, and one of the theses was that they were better inside of us, because when you're dealing with these large institutions and they have hundreds of people in vendor management and they scrape your financials. And so by ANOW being in the Voxtur family, we were able to accelerate their adoption and onboarding with one, as I've referred to earlier, one of the largest mortgage originators in the country. And so that was mainly because we had the expertise, we had a sophisticated sales team, we had a balance sheet that they would approve, and that we were a company already known with an MSA in place. And therefore, a lot of our clients now, and what we look to do with ANOW is continue to bolt on an ANOW license agreement to all the MSAs. I believe the current number is about 130 MSAs that we currently have in place across large, well-known institutions. And so that's part of the acquisition thesis, as well as taking these smaller companies, putting them in the Voxtur family where we have, more expertise and more sophisticated process and infrastructure that allow, and MSAs, master service agreements already in place with some of the largest lenders in the country. The other way to think about it, and I've heard somebody describe our business, we are an data in, API out. And so it's important for everyone to realize Voxtur isn't trying to take over the world. We're actually partnering with our clients because they have much larger systems in place. And so the way we view it is we're going to partner and be collaborative. It's in our DNA, and collaborate with our clients and bolt on. We don't need to be at the forefront of everything. We don't need Voxtur's brand everywhere throughout the banks. What we do want to do is make sure that these professionals or lenders, institutions, are using our software every day and making their job easier to do, much more efficient. And so moving forward, I'm the financial for people know I'm currently actually speaking to you. I'm down in Florida where our head office is. We have just had our management/board offsite as we finalize the 2022 budget. And so I'm reluctant to put out any forward-looking guidance today, but the goal is to put something out ideally by the end of the year, or if not, in the early part of next year in 2022. But what I can tell you is this 80 million revenue target that we've had, I'd be disappointed if we don't exceed that. We released our Q3 results about a week or two ago, and we're on a we're on $100 million. We were 24.7 million top line, and so I equate that to a $100 million run rate going forward. And so 2022, as I referred to earlier, and I probably should have said at the outset, Voxtur. What is Voxtur? Well, Voxtur means growth in Icelandic. And so that's another pillar of ours, an absolute value that we have instilled in Jim and Gary at the executive to the entire organization, that we are all about growth. So we're a real estate tech company and we're a growth company. I'll get to the third pillar before I finish. And so this $80 million, I would argue it's probably $100 million based on our Q3 result. We expect that to continue to grow. But most importantly, I think we have some really, really exciting initiatives on the right, and innovative type products in the title industry or title segment and tax segment, whereas we'll be able to tell owners or consumers whether a property tax assessment is over-assessed or under-assessed and by how much. And these types of products are very innovative, They're not currently in even this forecast, but what I can tell you going into 2022, the goal is to more than double our current revenues or our revenue target today. Moving forward, I want to give a little bit of background about who we are and who's the management team here. Gary Yeoman is our executive chairman. Gary was the founder of Altus Group, which is now in between, somewhere $2.5–3 billion tech company listed on the TSX. He took them public in 2005. Altus is a byproduct of, I was along there with Gary, about 35 plus or so acquisitions ranging from 5 million up to 130 million. And so a lot of experience there. We're the original investors in Real Matters, so know that business fairly well in terms of another public company. I believe they went public about 4 years ago, over $1 billion today. And then Jim Albertelli, he's our CEO. He's a well-known commodity in the mortgage finance space, had built a distressed asset trading platform for the U.S. and had sold that. So he's exited 2 companies in his previously, but now is the CEO of Voxtur here. And so, again, very well known throughout the mortgage finance and title space in the U.S. Although their names aren't on there, we were very strategic and purposeful in terms of clearing our board and updating our board this past June at our AGM. And so we said that they needed to provide value, whether it was in the capital markets or with the clients. And so just to highlight a couple people, Jim Kelsey, who's the former vice chairman, just recently retired about 1.5 years ago, of the Bank of Montreal. Very strategic, very complimentary, and has helped us. And I'll get into our partnership with BMO in a moment. And then we added another gentleman by the name of Joe Murin. So he was appointed by Bush and Obama administration, and he was the president and led Ginnie Mae, which is one of the more prominent companies in the mortgage space. And so has a wide following cast, but has been, more importantly, super complimentary with clients and product development. Moving along, I'll give you a little rundown on our cap table for those so they can better analyze to the extent they need to on this with respect to these items. But we have 484 million shares outstanding. We're little over 38%, so we're about 40% owned, which is super important, something we take a lot of pride in because it's not do what I say, but we're truly incentivized in this company to ensure it succeed. And so that 40% is primarily made up of Jim and Gary, who have invested their own money. This is not a byproduct of having inflated salaries so they can go and buy stock in the marketplace to show their ownership. But this was hard-earned dollars that they had invested, their own money that they had invested in Voxtur, and that's how they acquired those shares. But Jim and Gary are at the forefront of that to the tune of approximately 175 million shares are within those two, are controlled by those two alone. So highly incentivized management team. We have some warrants that are in the money that stemmed from a previous acquisition. Options, RSUs, and DSUs are a form of internal employee and / director-based comp equity plans. But moving down, the one part that I did want to highlight here is our term loan with the Bank of Montreal. And so a little bit of context there, that the bank had approached us, or we had approached the bank due to our history and long-term relationship with the bank and the addition of Jim Kelsey, as I said earlier. But ultimately, they had re-upped their credit facility with us in 3 different times due to the belief in the business and partnering with us as we did some of our acquisitions and as we are growing. And so we have a long-standing relationship there. What was stemming from when we were even $10 million market cap, not much more than 14, 15 months ago, down at the 10-cent level. What was surprising to us was that by working with them and going through the due diligence with them on the credit side of things, they had introduced us to their capital partners group, which is their equity group. And BMO had led the last 2 private placement financings for us. which was very unknown, but they're super supportive of us, and it's been a great partnership, and they continue to figure out how we can work together and grow the business, and they've been great supporters. The last thing I would say is, we've been around, I would really say, since Gary had taken over. This was a company formerly known as iLookabout. We had changed the name to Voxtur, the ticker, as when we did an acquisition with Jim and his company this past February, and used that as the catalyst to really reface the company. And that's how we became Voxtur. But ultimately, I would say this is a really interesting high growth story. And so, like I said, real estate technology and growth are two absolute requirements in this company, whether we're buying, building, or partnering with someone, and the way we carry ourselves and project and view ourselves internally from a budget and a revenue perspective. The last thing, I guess, to sum up the presentation, if there's three takeaways, we're a real estate tech company, as I've referred to. We're trending about $100 million top line, and we look to double that next year. We are getting a lot of interest due to the nature of our products, the markets we serve, the fact that over 90% of our revenues are U.S.-based. So we're getting significant amount of interest by institutional U.S. shareholders and kind of discussing and trying to push us to more of a U.S. big board listing. I'm not suggesting we're doing that today. What I am suggesting is that there's been a lot of demand due to the bulk and the products and the things that we're doing, but full well knowingly. And the third point would be, we've been there, done that, guys, in the sense that we've lived, in Gary, and in the capital market space for the better part of his career, everything from taking a company public to now managing that, raising over hundreds of millions of dollars previously, and then you putting that cash to use in terms of doing accretive, synergistic acquisitions. And so again, I would finish it up by saying we're a high growth company. We're evaluating options and getting high amount of interest in the U.S. investor base, institutional investor base, and our management team is really not only incentivized but driven and have a lot of experience in the capital market space, or acting as a public company. So I'll leave it there. I'm not sure. I'll check the Q&A at the moment to the extent we have any questions. So bear with me here. But thank you for your time. Really appreciate you tuning in, and feel free to reach out to me anytime. I'll throw up my coordinates there. Always happy to have a conversation. I may have skipped over a few things that are second nature to me or in the real estate space, but to the extent you do have any questions, whatever I've said today is interesting to you, please reach out directly to me. My email is jordan@voxtur.com. I also have our investor relations, Bill Matulis. So please reach out anytime. Operator, I don't believe I see any questions. Just bear with me. I'm going to look in the Q&A. There are a couple. I apologize. So one of the questions is, thank you, Tim, Bobby, apologies. What is your vision for the company for the next 12 months? Where would you like it to be? Well, I think what I kind of alluded to it a little earlier from a capital markets perspective in terms of the U.S. demand that we're seeing right now. I think we have the acquisition pipeline is still there. It's strong. It's healthy. However, I think as a management team, we've also recognized that we've done quite a bit in this past year. Thankfully, our shareholders have appreciated that and have got a lot of value out of that just by the increase in our share price alone over the last 14 months. I think, we did a deal in September, one of our private placements, September 2020. And we did an offering. It was a 10% discount at 15 cents at the time. I mean, we closed over $1 yesterday. So really happy. I think the market's appreciating some of these, inorganic growth objectives or actions that we've done. But I think most importantly, we're going to, potentially, I say this, but slow down, really ensure that we're integrating these businesses, because it's not, when you do an acquisition, it's lost sometimes on people, it's not always just a plug and play. We need to, we evaluate these things, and when we're doing diligence, we kind of bucket them into three things. There's financial, there's legal, and then arguably the most important, though, is cultural. And so there are varying views or levels of experience when you're joining a public company and what that means, right? And when you're joining a high growth company, it's one thing to say it, but we, naturally as a public company, have to disclose that every quarter. And so I think we're, integrating a lot of these businesses, educating a lot of the founders who have thankfully, all the management teams of all the acquisitions we've done over the last year have all joined the the company. They're all highly incentivized. They've all chosen at their will. We put our capital creatively to them. And what I mean by that is they've all taken the majority of their purchase price in stock, which is great. And what it meant, it was fairly important to Gary, I, and Jim when we do these things, because it shows that they actually believe in our vision, that they believe and want to be part of the story here. And so it's been an absolute pleasure with all of these founders that they've not only joined, but they actually put their money where their mouth is as well and took some of our stock back. Not all acquisitions are stock based, but again, we typically use a portion of cash, a portion of an earnout, and a portion of shares. And so those are three also requirements, it's not exactly the same every time, but we typically would like to chop those buckets up into a third, meaning a third cash, a third earnout, and a third shares. And so it's been really successful. But I think where we're going is we're going to look and continue to grow in the base business, Bobby. But the second point is we're looking at everything that's going to enhance our client's business. And so I'll give you a small, quick example of that is we're looking at a data company or a piece of technology that is would provide insight with 97% accuracy as we're going through testing. 97% accuracy, whether a borrower is going to prepay his loan or default. And either outcome is super important, because if someone's prepaying, they're going to arguably lose that client and they're prepaying for a reason, and they want to retain that relationship. Or if they're defaulting, that's also not a great outcome as either. But this allows them to get ahead of it and solve for it ahead of time. So those are kind of the unique solutions that we're looking at. And so, Bobby, I would say the vision is we're looking at everything that can enhance value and serve across our platforms, from the beginning of the loan in the origination space all the way to a defaulted loan or somebody that would default on their loan. And we're looking at technologies, whether it's software or data, that can plug and play and enhance that value. This space, thanks, Tim. This space doesn't seem to be widely followed. Can you name some of the larger companies or some competitors in the sector and how Voxtur compares? Well, what makes Voxtur unique, it's a great question, but I sort of alluded to it earlier. There is no real company that looks like us. There's nobody that has digitized the entire valuation process. There are companies that have digitized certain aspects of it. There are companies that, CoreLogic does a valuation. They got taken private for over $6 billion about 6 months ago. And then there's, title companies, the old Republic titles, for instance, traditional title companies that are doing things the old way. They're huge companies, but they're not using technology to connect that, to underwrite those loans and do the due diligence on those loans by leveraging the data. So there are companies obviously in the title space. And then, our unique differentiator is really tax. And there is nobody out there in the residential space that is using a predictive tax, property tax tool to get ahead of the problem and identify either a future risk or a future liability to the extent someone appeals it, or to ensure that, the private side isn't overpaying. And so that tax piece really, really is what sets us apart and makes us unique. So I don't know if I'm answering the question fairly, but there are a lot of companies out there, be it a CoreLogic or a title company or Real Matters, but there isn't one company that actually does all three of these pieces, puts all three of these services under one roof and under one platform. So yeah, and that therein lies the excitement, and that's why we get super excited, and that's what sets us apart. I think. So hopefully that answers. I believe that's the end of the Q&A. Although I'm trying to refresh here. Could VXTR, could Voxtur be an acquisition? Target, absolutely. I mean, I would be lying to say if I didn't. What's good though, and where we can get to control that for the most part is, and allow us to achieve our true potential, is the fact that management owns 40%. And so we're allowed to control that narrative. We've had inbounds already from much larger title companies or real estate tech companies. We have a good relationship or familiarity with the Compass guys. There's other tech companies that have gone public in the past year, like a Doma, a Blend. And so our conversations with them, are more about, hey, let's work together. This Voxtur's just getting started. We are on this growth path platform, but we really are in early days of really realizing our true potential. And so I think we could be, because I think the larger companies that don't have the ability to be as innovative as we are and move and be as agile as we are in terms of our growth and product development. But I think we get to control that narrative to the extent that management owns 40% of the company. So we'll see where it goes. If someone's offering $10 billion, I think that gets taken out of our control. But we'll see. We're working to be collaborative with some of these larger real estate tech companies. I believe that's it. I apologize. Here they're coming in as we speak live. Is there a plan to create more awareness about Voxtur and increase the market awareness than what it is today? And I apologize if I say your name wrong, Chetan. Absolutely. We have grown. I referred to it earlier. We went from we were only a $10 million market cap about 14, 15 months ago. And so naturally, Gary and I come from Altus, and so we came from the large cap space, and we've come all the way down to at that time, the microcap space. And we've evolved, thankfully, into, maybe this mid-cap space, somewhere, close to $500 million market cap. Well, that's a transition. That takes time. And that requires a different level of investor relations, marketing, outreach. I mean, we've already onboarded. It's early days in terms of we're working with a marketing company, because we realize we need to mature. We have a lot more eyes on us. We need more clarity in our story. We need to improve this constantly. It's an evolving story. It's an iterative process. And so, Chad, we're definitely moving from who we used to work with and partner with from an investor relations perspective, to now getting back to, getting analyst coverage. When we were that small, our former contacts and friends in the space, research analysts, we were just too small to cover at the time. Now we're getting inbounded daily about, hey, you're finally at a point in time, you've crossed the chasm that I can cover you. I want to get better knowing. This is an exciting story. How can we rush out some research? We've got 2 research analysts today. I believe we should have 2 more early in 2022 as they continue to understand the story and realize, who we are, what we do, and the growth factor, the technology factor, and how we're transitioning this business. So the answer is yes, we're definitely doing it. The U.S. market, though, is something, a focus for us. We definitely recognize, our story has become mainly a U.S. story. So we're definitely making investments in terms of improvement and doing, conference like this. These things, we weren't doing, 14, 15, 16 months ago, because we were so heads down and trying to build the business. But we're definitely getting and working to improve and get our story out there and make it more aware, just based on the demand alone, and people telling us. Another question just came in. how long do you expect it will take to show your true potential and show it in stock price? It's a good question. Hard to answer because these days you can't always predict what happens in the market. So I'd say that's number one. I would argue we're already sort of seeing that. I don't think we're realizing our true potential today. I think we're fairly undervalued. I mean, that's an opinion. You know, the audience here, you guys are the experts from an investment standpoint. But you're starting to see at least our values start to catch up with us, right? And start to be compared to some of these, you know, much larger real estate tech companies, that public tech companies, be it the Blend and Domas of the world, or, you know, CoreLogic formerly, but got taken out at a fairly high multiple. And so I think we're on that journey. How long it will take is anyone's real guess. I think, you know, starting in the first half of next year, you know, prior to the summer, I think the plans that we have in place, the partners that we've engaged in the last, you know, 30, 45 days, and while we're, I think that's where you're going to really see a pop, because we've come through. There was a slide in my presentation earlier. What we've said and what we've done has been 100% accurate. And so that's why it's a feel-good position. I think we're showing the appreciation. Our shareholders, Paul, have, you know, started to realize those fruits, right? Those early believers. And listen, everyone's investment thesis or abilities are different. But what's given us as a management team great satisfaction is by being able to go back to the original institutional people that say, come back in a year, you're either too small or you're not in the right space, or show me. And we've been able to walk in with a smile, show whether it was an acquisition that we took down, whether it was a revenue target that we took down, whether it was partnering with or getting a BMO involved in our story. And so we've come through on everything we've said we've done. And I think, you know, we're, as I said, we're just getting started. I think our story is starting to get out there, but it's still not well understood. But we're trying to turbocharge that while the business is growing at the pace it is as well. Hopefully that answers your question. There's a question: who is your main competitor in Canada and the U.S.? You know, what's interesting is I kind of alluded to them already in terms of you know, the Real Matters of the world, the CoreLogics of the world, the title companies in there. There's just too many to name, but I think nobody has our technology, so it's, you know, it's hard for me to even put competitor in the same place, in the same sentence, right? And use and compare us to these companies, because it's not a fair comparator, right? Nobody has been able to, from start to finish, digitize that entire process. As when I gave the ANOW case study. Nobody has that. People have digitized either interfaces or data feeds or certain aspects, but nobody's taken those processes, right? And as a result, I think it's created demand. Our clients and the large lending institutions have approached us and said it was unique, so much so that it was actually hard for them to get their head around, because they're like, how is this? You know, some of them anyway have said, how is this possible? How do I get confidence? And they've tested it, and we've passed every single time. Like I said, we onboarded. Nobody was able to do this, and a lot of people don't believe it, but we've onboarded, you know, the top 3 largest wholesale originator in the country within 3 months. And that was from contracting to approvals to developing to the integrations and testing and training. You know, nobody's been able to do that. And so hopefully that answers your question. I do think we're truly unique in that sense. We're in an exciting space. It's a highly growing space. There's a huge amount of opportunity here as a result of COVID in terms of accelerating the adoption of our tech. But I think that's we're just getting started. This is really an exciting company, and we're trying to grow in everything we do. So I think that's about it, although I know I appreciate I've said that a few different times now. But I'd like to thank you all for coming or for attending and listening in, and feel free to reach out anytime. So, operator, I'll turn it back over to you.
Certainly. This does conclude today's presentation. Thank you for tuning in.